Over 300,000 people in Canada buy their homes for the first time every single year. Now, given the house prices being so high, we want to make sure we're maximizing all of the incentives that are provided by the government to be able to minimize the purchase price of the house. The rules around the incentives can be very complicated and confusing. So in all of the scenarios, we will assume that a couple are buying the house for the first time. They're in a 40% tax bracket and they will be maximizing all of the benefits that are being provided by the government. I will explain all of the different benefits, how they work, and at the end we will see how much total tax savings they will have from using all of these benefits. First up is the RRSP Home Buyers Plan. Although this has been out for a while, it works now as well as it did before, and it can provide substantial tax savings. The way this works is it would allow the couple to purchase a house and withdraw up to $70,000 from their RRSP without any penalty or having to pay taxes. So it's $35,000 per individual, and a couple are able to take out 70 in total. And let's say given their 40% tax bracket, they would really be saving $28,000 in taxes by using this strategy. Now the amounts need to be in the RRSP for over 90 days, so make sure you are abiding by the rules. The one thing that you do need to do is the amounts that are withdrawn by the individuals, they need to be paid back over 15 years or they will be added back to their tax return. This is very beneficial because it allows you to get an immediate deduction on your taxes and you only have to pay the amounts over 15 years. This allows for maximizing your refund at this point, which you could use for a down payment or for your new house in any way which you like. The next tax saving strategy has to do with the new program called First Home Savings Account. This is a hybrid between a TFSA and RRSP, so the benefits are enormous. What it allows you to do is invest money into this program up to $8,000 every year. You get a deduction from it just like an RRSP, and if you do get profit from it, then you won't have to pay taxes just like a TFSA. So let's say the couple in our example maximize their benefit by investing the full amount into the FHSA over the period of time up to a maximum of $40,000. They would have a tax saving of $16,000 by using those deductions against their income. And if they were investing this money and getting a return of say 6%, then they would have an increase from their investments of $2,400, which is an added bonus because not only are you getting the tax deduction, but you're also able to grow the money tax-free just like a TFSA. The other benefit is first-time home buyer tax credit, and this applies on your personal tax return. Make sure you notify your tax accountant when you're doing the returns. The credit was $5,000 before and now it's been increased to $10,000, but the way it really works is it's 15% off the $10,000, so you can get a benefit of $1,500 on your tax return just for buying a first home and applying for this credit properly. This benefit is more to do with Ontario, and it's a land transfer tax benefit. Anytime there's a transaction of real estate, there's a land transfer tax applied on that transaction every single time. As a first-time homebuyer, the couple can apply for a refund and get the benefit of up to $4,000 in refund. So this amount would have had to be paid to the government, but now you won't have to pay this because of this first-time homebuyer benefit. Again, this is only for Ontario. It is important to note that both couple would have to be first-time homebuyers or this amount would be reduced and it wouldn't be the full amount of $4,000. So in conclusion, let's add up all of the totals to see how much this couple would have saved if they were to have applied all of these different programs to their maximum capacity. In this, we are not adding the investment returns that they could have made over time from investing into the RRSP or FHSA, but we will be looking at the tax saving that they would get from using all of these strategies. First three strategies are for everybody in Canada. So maximum contribution to RRSP would allow them to get a deduction of $28,000. Full contribution to FHSA would allow to get a deduction of $16,000, and maximizing the federal tax credit would allow them to get $1,500. Now, if we add all of these up, then we would get a total of $5,500. Now, if you're in Ontario, we can add another $4,000 because of the refund that we talked about, the land transfer tax refund, and this would allow you to get up to $49,500. Now, this is a very large sum, and if someone is planning to be buying a house in the next 5 years, then I would definitely recommend them using all of these strategies to be able to get up to $50,000 in tax savings in the process of purchasing their property. I will include below all of the links to these programs so you're able to explore them at your own time, but definitely speak to a professional to be able to apply them properly on your taxes or on the transaction. If you enjoyed this video, please subscribe and check out my other video, link on the side, which talks about why you should be investing as soon as possible.